We've spoken about payroll taxes, which get deducted from your paycheck every month. That's a huge amount of money that Uncle Sam collects from the entire economy. Uncle Sam uses all of that money to fund federal programs for Social Security and Medicare, where Uncle Sam gives out tons of benefits to those who are retired or to those who have a disability. So let's talk about these payroll taxes, which are imposed under the provisions of FICA, or the Federal Insurance Contributions Act. So this is FICA, and there's FICA Social Security, and then there's a FICA Medicare portion. Now, employees pay out 6.2% of their payroll up to a certain dollar limit for FICA Social Security, and then pay out 1.45% of the salary towards FICA Medicare. Here there is no dollar limit, but generally for employees you have 6.2% plus 1.45% or 7.65% contribution towards FICA. The employers typically have to make a matching contribution. So not just the employee, the employer also pays out 6.2% towards FICA Social Security and 1.45% towards FICA Medicare. That's again 7.65%. So once again, payroll taxes, employees pay 7.65%, employers pay another 7.65%. Now let's talk about the guys who are self-employed, who don't work for anybody else, who work for themselves. Now, those self-employed guys, of course, they are also eligible for Social Security benefits after they retire. But while they are working, they are not getting any salary because they don't have any employer to give them a salary. They are actually playing a double role. They are the employee for putting in all the hard work, and they are their own boss. They are the self-employed, they are the sole proprietors. And that is the reason why Uncle Sam has imposed a self-employment tax on all those self-employed guys. Now the self-employment tax is basically 7.65% plus 7.65%, which is 15.3%. Because once again, Uncle Sam noticed that those self-employed guys are both the employee and the employer. All of this is filled out by those self-employed guys on Schedule SE. So there's a Schedule SE which is used to calculate the amount of self-employment tax. Just to connect the dots back, when we had looked at wishes, if you remember, the first S of wishes was deductions for the self-employed guys. And at that point, I told you that the self-employed guys who are paying the self-employment tax in addition to the regular income tax will get a deduction, an adjustment to AGI for the employer's portion of the self-employment tax that they have paid. On page 93, we're looking at other taxes. So put a box around Schedule 4 and highlight other taxes. And our focus in this section is going to be on highlight self-employment tax on line 57. Self-employment tax, we'll see that on put a box around Schedule SE. Now let's start with talking about highlight FICA, or the Federal Insurance Contributions Act. And we know the FICA tax includes highlight FICA Social Security, highlight FICA Medicare. Now FICA tax rates are employers plus employees FICA tax contribution. So basically, highlight the total FICA tax is 15.3%, which includes highlight FICA Social Security 6.2% for employer plus 6.2% for employee. Now, FICA Social Security is on a maximum of underline $128,400 for 2018. Next, highlight FICA Medicare, which is again 1.45% for the employer and 1.45% for employee. There's an additional FICA Medicare employee contribution at 0.9% for the excess over $200,000 for single individuals, $250,000 for married filing joint. Now, note that this is employee only contribution and this is for the rich folks. Employers do not match. Turn to page 94, where we're looking at highlight self-employment taxes on highlight Schedule SE. Since self-employed individuals work for themselves, they are highlight required to pay both the employers and employees' share of FICA. For example, underline a sole proprietor, an independent contractor, a partner in a partnership. Now, self-employment taxes are applicable highlight if self-employment earnings are $400 or more. Now, there's an above the line deduction allowed for the employer's portion of self-employment taxes. And if you remember, this was right the S of wishes. So write wishes and circle the first S. So once again, self-employed individuals are allowed to deduct the employer's portion of self-employment taxes paid by them. Talking about partners in a partnership, right? Partners pay self-employment tax on share of partnership income plus any guaranteed payments received. And of course, we'll talk about partnerships and partners in a lot of detail when we get to Reg 4. Let's look at the second example that we have on this page. It says if highlight self-employment income of Y, who's a single individual for 2018 before the deemed deduction was highlight $200,000. Then highlight deemed deduction for Y is highlight 7.65% of $200,000, which is $15,300. Highlight net earnings from self-employment for Y is going to be considered at $200,000 minus the deemed deduction, which calculates to be highlight $184,700. And this is right the base to calculate self-employment tax. Now that you have your base ready, let's calculate the self-employment taxes. So you got two portions here, FICA Social Security, FICA Medicare. Now FICA Social Security is circle 12.4%, again employer plus employee portion of a maximum of underlined $128,400. So that's the maximum number for 2018. But for FICA Medicare, you want to take the entire amount. So circle 2.9% of underline $184,700. So the total self-employment taxes in this case is $21,278. Now the deductible portion of self-employment tax is underline employer's portion only. And right there, wishes, WISHES, circle the first S. And right there, approx 50%. So the deductible portion of self-employment tax on 1040 for the self-employed individual Y in this case is $10,639. When we looked at gross income on Form 1040, I'm sure you remember my mnemonic, Sir U O. The U stands for unemployment compensation. So if somebody's not able to find a job, Uncle Sam pays out unemployment compensation to that individual, which is of course also taxable for federal income tax purposes. But the point is, where does Uncle Sam get all that money to give out unemployment compensation to all those who are unable to find a job? Basically, Uncle Sam imposes an unemployment tax on employers under FUTA, which is the Federal Unemployment Tax Act. Turn to page 96. On the top left, put a box around Schedule SE. And this is the schedule you use to highlight self-employment tax. On page 95, highlight federal unemployment tax. And this is highlight imposed on employers only. The FUTA tax, or the federal unemployment tax, is paid on a separate FUTA tax return.